Evening, guys. So welcome to our weekly mentorship video where we're going to look at a couple of pairs as suggested by the members in the group. So we're going to look at BRENT. We're also going to look at USDCAD, and then we're going to look at pound USD. We're going to look at pound USD. So those are the currency pairs and one commodity that we are going to look at. So to start with, we're going to look at USDCAD. We're going to start with USDCAD. Now, things that you have to take note of is that dollar is shrugging off, as in it's fighting, and it's probably winning the battle right now of interest rate cuts. The chances of rate cuts, they are diminishing by the day, and we are highly unlikely now to see a rate cut in March, unless if the data coming out from other sources like retail sales, CPI and all that, unless if that data changes, right, then we are going maybe to see a rate cut. But as things stand right now, dollar is quite strong, right? Dollar is quite strong in the first month of the year. So with that in mind, when you look at currency pairs like USDCAD, USDCHF, USDJPY, I'm sure you've seen how USDJPY has rallied to the upside, especially in the past couple of days. You've seen our USDCAD has rallied to the upside. So basically you need to approach pairs that have got dollar as their base currency. You need to approach them looking for market maker buy models. Now, market maker buy models is basically a setup that you're going to need to see panning out. You need to see that on price action, whether price is in discount for you to go long, whether there's been a structure that has now been verified for price to go to the upside, like what we have seen in the past couple of days on USDCAD. You can see that price was trending to the upside. Only once it gets to a premium level or premium zone, then sellers try to come back into the picture, only to take price towards a discount array, clearing out internal range liquidity of sell stops before another rally to the upside. Even though it's a Monday today, you can clearly see how price went to the upside from a bullish order block. You see, that was created from last week. That's a market maker buy model that I'm referring to. So you'd have been monitoring this level as your level of entry for long opportunities. So let's look at it quickly. I'm gonna try to be brief and precise so that the video is not that long, because once it gets too long it might get boring to look at. So when you look at the monthly chart, right, so we'll be hunting for long opportunities on USD CAD, right? When you look at the monthly chart, you can see the first month of the year clearly has found the buyers have came back into the picture from this bullish order block. You see, that's a monthly bullish order block with December trading and closing right just above the bullish order block. So what you are going to need, or what you should see as a trader, you need to see levels where price is likely to reach out for in terms of grabbing liquidity. Like, where is price trading to? Where is the draw on liquidity? You can see November and October there. Those are what we call railway tracks, almost equal in terms of body size. So on the monthly chart, you can clearly see we've got price finding support inside a monthly bullish order block. That means higher time frame monthly bullish order block has provided support. So when you go onto the weekly chart, you need to see price trading to the upside from discount area. In terms of targets on the monthly chart, I think the monthly target has been reached. You can see October's low is coming in at 1.35404. The current chart, the high is 1.35410. That means the imbalance has been filled. So basically you might not see price trade further to the upside up until probably maybe February. For the month of January, we might not see price trade to the upside. Why is that so? Because the imbalance has now been filled. You see, the imbalance on the monthly chart has been filled. So with those two points of interest on the monthly chart, there's nothing else more that you need to look other than that, other than just looking ahead. You start asking yourself questions. Are we really going to see price trade above October's high? That's a bit of a stretch, you see, but it's not possible, but it's a bit of a stretch, because heading towards end of March, April, I think we're going to see dollar making a 10 for the yearly bearish momentum to begin. So the high of October might be a stretch in terms of price trading above it, right? So, but also chances of market going to the downside, they're there, but we need dollar to turn to the downside. So for right now, I think it's ideal to favor more long opportunities on USDCAD only when it's in a higher time frame discount array. So when you go to the weekly chart, right, once you go to the weekly chart, you need to see discount arrays providing support and premium arrays providing resistance, right? And that's what happened last week. Price traded right into this bearish order block. Look at last week's high. Last week's high is coming in at 1.35410. That's the one I mentioned earlier on. Look at the equilibrium point of this bearish order block. That's where price reversed. Now, if you remember correctly, or if you have watched the video that I recorded using CTrader, the one for hindsight study, this was an opportunity. Once price reaches the open of your bearish order block, that was an opportunity for market to go lower. That's 70 pips, you see. So you'd have placed a buy, a sell limit order right there for price to trade to, and then trigger it to go to the downside with your stop above the OB, the bearish order block. So you can clearly see price last week found resistance in a bearish order block, and you can see we've got an uptrend, a very nice uptrend forming. 1, 2, 3, 4 weeks market is just trending to the upside, but we now have levels like that. You see, those levels there, they will attract price. These are going to be your targets once we see a clear turn in the market structure on dollar index. These will be your targets. As of now, last week's high is a target from discount, right? But we don't have any discount on this weekly chart besides this fair value gap down here, which is going to be a stretch. Market cannot drop to that level instantly, but once it drops to that level and we are still seeing a very strong dollar, then you expect this level to provide support and price pushing to the upside, right? So we go to the daily chart. Okay, let me just go to the weekly chart and see. Okay, this imbalance has now been filled. Yeah, chances are very high that we might find strong resistance here and price pushes lower. Just take note of this current weekly candle. It might close bearish, heading for last week's low, because we are in a higher time frame discount array. But the fact that we are favoring market maker buy models, those shorting opportunities should be just scalp. Once you are in a good profit position, maybe preferably 30-40 pips, break even, and make it a risk-free trade, because market can just instantly expand to the upside. So on the weekly chart, there isn't really nothing much more except that this level should provide what? Resistance. So if you're in a long position, you should be looking to take profits once price reaches this area. Onto the daily, right? Onto the daily, you need to highlight your discount areas. We've got a fair value gap right there from last week. Market opened, dipped into that gap, and expanded. See, market opened, traded into the fair value gap, found support, and then there's a rally of close to 52 pips since market opened. So this imbalance here will provide support when price pushes to the downside. We also have this old bearish OB and the one below it. Those levels will provide support when price trades to those point of interest. So you're looking at something, a structure like price comes into this level, right? Price comes into this level before it continues to the upside. See, that will be the structure that you should be looking out for. Market trading into a daily discount array, a weekly discount array, a monthly discount array. Monthly discount array is very far, it's down here. And then we've got our weekly fair value gap right here. You see, so those are the levels you'll be looking for. Long opportunities, targeting old highs, targeting this premium array here as your take profit levels. Then on H4, this is where you specify now your entry levels. You see, we've got our H4 bearish order block right there, right? That's a very nice area for you to go long. You can clearly see price is traded below these relatively two equal lows. Buy side liquidity, sell side liquidity liquidated, and price is now rallying to the upside. Boom, market goes to the upside. These bearish OBs 1, 2, and 3 should be targets in terms of where price is likely to find resistance, right? Another level of interest for long opportunity is this area here, right? So what you can do, right, if you're in the mentorship group, with the same video that I shown you on C Trader, this is where you place your buy limit orders, right? Inside this fair value gap, or preferably this candle's high, you place your buy limit order with your stop below this candle's low, 5 to 20 pips below that candle's low, depending on your risk management. The reason being that we don't want to see price trade lower. If price trades below this, then chances are very high that we're going to see market continue going to the downside. So the fair value gap and the H4 bullish order block, these are the point of interest, crucial levels on USDCAD this week in terms of hunting for long opportunities. You can also short from these bearish order blocks, but only on negative news for dollar. You see, if you get a negative release while USDCAD is inside this bearish order block, then there's nothing that should stop you to short USDCAD, because you've got clear conditions that are meeting your criteria. You see, negative news for dollar when price is in premium, you short, like what happened here, right? Let's go to the hourly chart, like what happened here during this hour here. So this is 19th of January, 1600 hours, 19th of January, 1600 hours. Let me just go to investing.com, and then we see what happened on 19th of January. 19th of January. Let me just open the this week. So we need, that was last week, Friday the 19th. So we're looking at around 5. You see, existing home sales came in hot. You see, negative release for dollar at 5 p.m. And then you go to the chart, you can see there 5 p.m. right there, price traded to an H4 bearish order block, and it tumbled only to find support inside an H4 discount area. So there's nothing that should stop you shorting an asset if your conditions are met. And the conditions that we are talking about now on USDCAD is if price is in premium and then you get a negative USD release, or you get a positive CAD release, then you should short USDCAD. But from a perspective of higher time frame buyers, long positions are ideal on USDCAD. Then let's look at BRENT, right? With BRENT, the ultimate target which I had specified was reached long couple of, I think about a month or so. When was this? This was the target, if you remember correctly, 22 December. That was before Christmas. Target was reached right here. Market reached that target, and then after that we saw right now you can see on the daily chart, the market is just consolidating, right? We've got price trapped inside this zone here, so we've got that, all right, and we also have that. You see, price is trapped inside this this triangle here, right? That's where price is trapped. We're not going anywhere, whether up or down. We're not expanding. Once price reaches the ceiling of that triangle there, means probably like it's like a bull flag, right? It's like a bull flag that we're having there. So we clearly need to see an expansion to the upside or expansion to the downside, right? That expansion is going to give us clear directional bias on where smart money is likely to trade to, right? We are going to see where smart money is likely to trade to, but from a higher time frame point of view, right? Let me go back to the daily, to the monthly chart, right? On the monthly chart, when you look at USDCAD, that's a bearish structure, right? But the current month has struggled to create a new low, and we still have outstanding orders right here on these old lows here, right? We still have outstanding. We also have a fair value gap right there between the month of December and November. That could be an ideal shorting range. But higher time frame wise, BRENT is looking to go to the downside. So we're talking of market maker sell model on H4. But on the weekly, on the monthly, that's where you do your analysis. You highlight your discount and premium areas. Premium areas for your entries, discount for your targets. You can see the past 1, 2, 3, 4, 5, 6 weeks, market is just consolidating after taking out this old low. We're having a consolidation. So this weekly fair value gap, also an ideal area for shorting opportunities if we do get an expansion to the upside, right? Which is a bit highly unlikely at the moment. I'm favoring more of shorting opportunities. And then we go to the daily. On the daily, we've got this bearish order block right there. We've got that bearish order block, and then in terms of targets, we've got these relatively two equal lows right there in discount. The discount fair value gap. These lows here, these are the ones I'm talking about. This will be your target for shorting opportunity, right? You'll be targeting those levels for shorting opportunities. So what you need to do on BRENT, once you go to your monthly, weekly, and daily, define your premium areas that you're going to be looking for shorting opportunities. And then when you go to H4, you're just defining your entry levels, right? You're defining your entry levels. Look at that price action. Clearly no directional bias whatsoever, right? But you can see bigger moves are happening to the downside once we reach this gray shaded area. And what is that gray shaded area? I'm gonna go to the monthly chart. That's an old inverted fair value gap, and price is gonna face huge resistance inside this zone, and it will be pushing to the downside. So much better if you get an H4, say H4 bearish OB, right? Something like that. You get an H4 bearish order block. That will be the one you use to go to the downside. As it is right now, you can clearly see there's nothing in particular that we can look for around this level. Only here, see that H4 bearish order block. So you'll be anticipating price to trade to this level, right? Once it reaches that level, then you should be salivating. You should be interested in the market, in oil. You should be interested in it because it's now at a critical level where opportunities are going to be provided. Once it reaches there, you should look for shorting opportunities to go back to like 76, 80, 76, 70. Okay. That's how you should be looking to trade BRENT. So for this week, take note of this bearish order block here. Price will likely find resistance. Then finally we've got pound USD. Easy. This one is easy. Looking for shorting opportunities here on pound USD. As long as dollar remains strong, right, irrespective of positive news for pound or whatever, this one is going to trade lower, right? You should be hunting for shorting opportunities. Shorting opportunities are targeting which levels? You see, we've got this inefficiency that has been left there since December. That should be your target for shorts, because we've got liquidity here of internal range liquidity of sell stops, right? That should be your target for shorting opportunities. Once you go short and you're looking to hold that position for a while, then that level there provides you with draw on liquidity, right? That's the level you are going to look out for in terms of market finding support. So that's your target for shorting opportunities. Right now, market is inside a higher time frame premium area in the form of a bearish order block. Shorting opportunities are ideal on lower time frame. So you need to see a clear market maker buy, market maker sell model on say H4 time frame or even on daily time frame. If you look at the weekly chart, right, the weekly chart, we're just consolidating. Market is consolidating right there. Now we've got two arrays, two higher time frame premium arrays that should be providing resistance to price. So take note of this current weekly candle on pound USD. Chances are very high it's gonna close bearish. If the chances are very high that it's gonna close bearish, where would it likely trade to? This relatively equal lows here. You see, those lows are vulnerable. Why? Because to the upside, all the work has been done. We traded above there. We've engineered our short liquidity. It's only a matter of time now for market to expand, to show us displacement to go to the downside. Now that displacement should be your trade. You see, that will be your trade. So that's the weekly chart, and you can see the internal range liquidity that I'm talking about is right here, you see, and this weekly bearish order block will provide what? Support. But by that time you'd have already got something from your shorting opportunity. So on pound USD, ideally you need to be hunting for shorting opportunities from a premium zone, and we've got two of them: weekly bearish order block and monthly bearish order block. Let me just make sure. Yes, this candle here, that's our monthly bearish order block. So this level, you can see already market is just consolidating, most probably redistributing here for another expansion to the downside. This level is vulnerable. 1.25 on pound USD is the draw on liquidity. Should be looking for market to be drawn to those levels. So on H4, inside that monthly bearish order block, we've got right here high probability bearish OB on H4 now. See, that's a high probability bearish OB, and targets 1, 2, 3. These levels will provide support, bearish bullish order blocks, you see. So market is basically redistributing right now on USD, on pound USD, and an expansion to the downside is likely to come forth during this week here. Let's see this week, what do we have in terms of pound public sector borrowing. Okay, we've got PMIs on Wednesday. You see, manufacturing PMIs on Wednesday, service PMIs on Wednesday, and also for dollar we've got service PMIs, and crucially for CAD. Remember I told you we should be hunting for shorting opportunities. Crucially for USD CAD on Wednesday we've got BOC rate decision. Then on Thursday for pound, what do we have? Nothing much. And then Friday, what do we have for pound? Nothing much. But we've got dollar news, right? We've got dollar GDP on Thursday, and we also have ECB monetary policy. So that should really give you a nice expansion, most probably to the downside on pound USD. And on USDCAD, anticipate a very nice expansion to the upside from discount. I would love Bank of Canada to announce their rate decision when price is either inside this fair value gap, number one, this fair value gap, and then number two, this bullish order block. You see, I would love to see that kind of a structure heading into BOC rate decision. So yeah, that's pretty much about it, folks, and I hope it's been a bit insightful in terms of how you're going to approach the markets. And as for gold, yeah, I think just be careful in terms of gold at this moment, especially this week. Just be a bit cautious in the way you approach gold, because we're now going into the last week of trading. Next week is a very short trade in terms of the monthly candle. You see, it's gonna close soon. So just be careful, just be cautious when you're trading the precious metal. So yeah, that's pretty much about it in regards to BRENT, pound USD, and USD CAD. So just to summarize, ideally looking for long opportunities on USD CAD from higher time frame discount, and looking for shorting opportunities on pound USD from higher time frame premium zone, and also looking for shorting opportunities on Brent crude oil. So yeah, I wish you guys good luck. and happy trading for the week. Thank you.